Good morning, trading world. It is March 10, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Today's title for the pre-market outlook: CPI report, how much will it test the consolidation pattern? Today is a big report day. We have CPI and Jobless claims. They are both sure to move the market. If you are not comfortable with the projected max risk or max loss on your positions right now, you should be flat going into these reports. Assessing risk is one of the most important yet most disregarded functions as a trader. If you were a swimmer or a surfer looking to get in the ocean before going in, if you see the waves and swells are normal, you will have no problem going in and going in deep or going out far. But if you were watching 10-foot tall waves and swells, you would definitely think twice about going in, because it's more likely for you to drown in these conditions. Trading is exactly the same. For me, I usually use the ATR indicator to measure the waves before I go in. On my futures trading, if the ATR is more than 2 to 3 times my normal stop loss, I know to cut the position size down, and if it's any more than that, I won't trade futures. Be smart in protecting your capital. Anytime you pull up your trading dome and the price is jumping around to the point where it won't stay in the screen, this is a big sign the market is untradeable at the moment. Just another warning to be careful in these conditions. Let's get to the key levels of the day. All right, here we have the key levels of the day, starting on the support side. We have Jack support area at 422 to 421, Queen support area 420 to 418, and King support area 417 to 413. On the resistance side, we have 424 to 425. Queen resistance is 426 to 427 area. King resistance is 429 to 430 area. Today, coming into the open, we have dissonance and big reports, so I'm not compelled by either thesis today, but more of a blend of the two. The main thesis is bearish, closing below 427.41 with a projected low target of 417 to 403. Alternate thesis is bullish, closing below 427.41 with a projected high target of 428 to 430. The current channel we are in is 425 to 416. I expect the CPI to be bad and give us a drop. And the jobs report, I expect to be good and give us a pop. I don't know whether they equalize each other out and we keep, going, but remember, we are in a consolidation pattern. I don't expect us to just drop and fall off the map. We should find support at some point today. Probably, I really don't see us going much further below than the king support today. I know the CPI report has the potential to be very, very bad, but somehow I just don't see us going off the map today. I could be wrong. We have to prepare like that is a possibility, but I just don't feel it right now. Let's get into the scenarios for the day. Alright, here we have the first scenario, which could possibly be our rounded reversal day type. Notice we have a lot of action taking place before the open. This is the CPI and Jobless claims. We should get a market moving event there at 8:30 where we possibly see down, back up, and then coming into the cash close, we continue that or reverse and continue that momentum down toward our queen or king support area. We find that midday chop at that point around midday, and the second half of the day, the same force in which we came down, we see that same force going back to the upside the second half of the day. Key thing to look for on these rounded reversal days: divergence. From the opening bell, as price action finds its trend, you should see divergence from that in volume, in your indicator, and in internals. That's the first scenario. Let's bring up the next scenario. Our next scenario is the trend day down day type structure. We open with a gap down. This is the previous close represented by the blue line here, so that shows us how far we open gap down. And as on the trend day type function, we try to fill the gap. We start with a small rally back toward the previous close, but somewhere on or before that previous close, we find resistance. I'm going to say somewhere around the 424, 425 area this morning. And we reverse and get into our strong trend of the day, which would be down. We ride that trend until we get to our midday chop zone, which will probably be around either the queen or king support area. Start the second half of the day with a head fake to continue further down, but we start to rise and somewhat rally into close. That is the trend day down type structure. The last scenario would be our expansive range day structure. With reports, we start the day off going lower. We find our decision area, a lower boundary around the queen support area before bouncing and chopping higher, and then finding resistance and testing or pushing the boundary that we made at the queen support even lower before reversing and finding our way back up, chopping higher and higher until we find resistance, bouncing off, and then again pushing those boundaries that we set higher and higher until we get back above the previous close. Those are the scenarios. that I have or that I will be game planning for today. Again, very important note at the beginning of the pre-market outlook about risk, how you should look at it. Again, capital is your most important asset as a trader, so we have to protect it at all costs. So if that means sitting out some wild moves or 10, 20-foot waves, that's what you do. You never want to put yourself in a position that you can't handle or there is a max loss over your head. So if you can avoid that, avoid it. As always, wishing you a positive trading day. Have a great one.